But why are you reasonably confident of a 3 to 5 year earning cycle, which is what we have to understand, because ultimately that is the fuel for the market. What gives you the confidence that high inflation, high commodity prices, these will not derail the new economic cycle or the earning cycle which has started?
I think the key is that one, inflation is a pass-through for equity. Inflation actually supports faster profit growth, because what is inflation? It is higher prices of goods and services. The companies which are selling these goods and services, they tend to benefit, at least in rupee terms, in nominal terms. Higher commodity prices, they help the profitability clearly of the commodity companies. And over time, the companies where the inputs are commodities, let's say the automobile sector or the consumer durable sector, they will pass it on to the end consumer. Because prices, let us remember, are not set by cost, but they are also set by demand and supply. So over time, these prices do get passed on to the end consumer, and that is what results in higher inflation. I don't think commodity prices would also impact the earnings growth rate. In fact, they may aid of the commodity specific sectors. As far as the other sectors are concerned, I think clearly the NPA cycle has ended. And given the economic cycles, the credit cycles of the capex cycles, I mean 6, 8, 10-year durations, I don't think we should worry about NPAs coming back anytime soon. The outlook for software sector is reasonable because the demand outlook is extremely robust. We clearly know what is happening in that space. Pharmaceutical sector, which has not done too well for a variety of reasons. There again, I think the new molecule pipeline is reasonable. There are cost saving initiatives underway. So I think from this low base, even that sector should do quite well. The consumer sector is a steady growth sector in India, and inflation clearly helps that sector. The utilities again is a sector which is not too, it does not vary a lot, and the growth outlook there should be reasonably steady. So I would say the profit growth outlook of India is quite reasonable, but we must also appreciate that the profit growth that we are seeing last year, this year, and maybe next year, we cannot extrapolate that profit growth. Just to give you some in a longer term perspective, around 10 years back, the corporate profits to GDP in India had touched an all-time high of around 8%. In fiscal 20, we had dropped to a low of last 20 years of 1.6% profits. I think both were extremes for some of the reasons that we have discussed. I think that process of normalization should be over by next year, and which is what I said, we expect profits to GDP to be around 4.5%. I think thereafter we should expect broadly profit growth in line with the nominal GDP growth rate. And we again come back to the same point that these are markets where we should take a compounding type of approach to equity investments and not one-off kind of